He is known as the Dear Abby of Finance's national tax expert. Dominique travels the country training tax professionals on how to help their clients save thousands of dollars a year on their federal income taxes. We're happy to have her in the studio this morning to talk about the 10 most common mistakes, tax mistakes, and potential tax implications that come from last week's midterm elections. Dominique, thanks for coming in this morning.
Good morning.
First of all, I was looking at the top 10 most expensive mistakes, and the one thing I was saying, I have heard that one of the biggest mistakes people make is they send in their return without signing it. Although that doesn't cost you money, it just
won't
costs you time.
cost you any money, just time.
Yeah. All right. Now let's go over what you say some of the top 10 mistakes people make.
Sure. You know, the problem today is that people are wasting about $1 billion a year in taxes that they just don't have to pay. And it's generally because of one of two reasons. They're either they don't have a good plan to take advantage of all the available breaks out there, or they're just getting bad advice.
Yeah, and the tax code is very complicated, and you advise people, especially if you're not filing an EC form or something like that, it really is good to go to a tax professional.
Absolutely. You've got to have a plan to take advantage of all those breaks.
And now, what's the difference in going to a CPA or one of these tax preparers?
You definitely want to go with somebody who specializes in tax planning. That's somebody who scours the tax code to look for all the loopholes, credits, and deductions.
Would that more likely be a CPA? Because a lot of people go ahead and they do their own taxes, or they'll go to one of these places that has a storefront, or get like a TurboTax or something like that. Do those work?
Sure. They can work, yeah. What you want to pay attention to is the language that the person is using and how often are they working with you outside of the year. You know, planning for taxes really happens before, so you can't afford to wait until April 15th. You should be working on a plan right now to rescue all those lost deductions for 2010.
All right, let's go over some of the things you think are the biggest mistakes. The first mistake people make, as you said, planning to fail. Next one, mistaking proactive for aggressive. What does that mean?
Sure. Well, most people think of planning as being overly aggressive and might cause red flags or audits. The opposite is actually true. When you plan ahead, you can actually map out a course to avoid all the things that will trigger an audit.
All right, then choosing the wrong business early, entity rather?
Sure, most business owners start out as a sole proprietorship, but then their needs change over time. So you want to make sure that you have a plan to take advantage of all the deductions that are available to other types of entities.
So, for instance, you mean
for example,
a corporation or an LLC?
You might be an S corporation or an LLC or a partnership or a traditional C corporation. They all have different tax breaks that are available with them.
And then what is the wrong retirement plan?
Well, retirement plans can be like a ticking time bomb. If you believe that your tax rate is going to be higher in the future, you just might be setting yourself up to pay more in the future. So you want to do an evaluation and a good long-term plan to decide which is the right plan for you.
All right, then missing family employment. This is a one that a lot of companies have done.
Sure. If you've got children with expenses, and what kids aren't expensive these days, you know, you could be missing an opportunity to hire them in your business and then take those deductions for summer camp, say, as a deduction.
And that's a legal write-off. So,
sure.
All right. Missing medical benefits.
You know, taxes used to be one of business owners' biggest expenses, but today rising health care costs tends to be a fear that business owners have. So if you don't have a plan to make those deductions legal, you could be missing out big time.
And then you've got the missing home office expenses. For a long time, I was always told that the home office was a red flag to the IRS.
Sure, and things are different, times are different. We've got technology now, more and more people are telecommuting. You've got to know the right way to take that deduction. There's ways that you can take it where it's not even displayed on your tax return.
And then if you work for somebody, can you take a car or a truck expense, or do you have to be self-employed?
Oh no, you have the legal right to deduct any expenses related to your job that are out of pocket. So anything that you're not getting reimbursed for by your employer, you have a legal right to deduct.
And then the missing meals and entertainment expenses?
Sure. You know, we do a lot of entertaining. If you're a small business owner, make sure you're keeping track of all those expenses. If they're under $75, you don't even need a receipt. You just need 5 critical pieces of information. The IRS wants to know who you met with, when you met, what you were talking about. As long as you document those in a diary, you're good to go.
And that does not send up a red flag to the IRS?
No,
not
they're
at all.
expected.
Okay, and then the last one, not working with an expert. We talked about that.
Sure. Got to get yourself some great help. Certified tax coaches are there to help you. Someone who specializes in tax planning.
And of how many people get audited every year?
Oh, it's really
it gone
small,
down? Yeah.
actually. Yeah, but I have to say the IRS is out there in full force. There's 10,000 more agents, so you got to be prepared.
All right. Thank you for coming, and we appreciate
You're welcome.
that.